Dangote Sugar reported a 176% rise in profit after tax to 39.7 billion naira for the full year of 2017. The company's revenues were also up 20.4% in the same period. Abdullahi Sule, Group Managing Director of Dangote Sugar, joins us now to unpack the numbers. Abdullahi, thanks so much for speaking to us today. Clearly, very sterling performance when you look at the year-on-year growth numbers. And the big question I think a lot of people are asking is it sustainable? So we know to some extent it was largely driven by a price increase because we did see the volumes year-on-year decline. But we also see the investment that you're making in local production, which I understand is a much higher margin business. So overall, looking forward, what can we expect in 2018?
Well, thank you very much, viewers. From what we are seeing so far from our first quarter, so far we have finished the first 3 months. And from the 3 months we are seeing, at least we are seeing some sustainability, and we are going to continue to see growth, in our performance. Our major restriction today happens to be only with the Apapa road network, and then of course we have a lot of smuggled product into the country, as a result of the situation with our inability to produce and to send out more. Until AG Dangote started working on the roads recently, and right now they have almost completed one of the lanes. Our trucks used to stay over 7-8 days, just coming into our Papa port. So that had been the major restriction. Otherwise, we will say that, yes, we'll do everything possible to make it sustainable and, in fact, to grow it by the time that we are going into our backward
But what will drive the growth? Because what I understand is that there is a quota restriction in terms of how much more you can import of raw sugar, which you, of course, process at your Papa plant. So where are we going to see the growth? Because it's either volume or price, right?
Yes. Well, the quota is coming as a result of also your performance on the backward integration. Last year, for instance, Dangote Sugar was the only company that actually produced locally. No other company was able to produce sugar locally. So as a result of that, the total quota allocation for last year was about 900,000 metric tons. However, we were only able to process and produce about 700,000 metric tons from the numbers that you can see. So, and that is attributed mainly to the Apapa road network. So, if we are also allocated about 900,000 and say we produce 800,000 out of that, even with the Apapa network, you can see now growth in that area.
So there's still some headroom in terms of the allocation.
Yes,
the quota.
Definitely.
Okay.
Yes.
Right. Okay, well, let's talk about the local production, which is, of course, more exciting, especially for Nigerians. Give us the growth story that is evolving there and where you see it headed.
The local production is going to be the most exciting and is the future, actually, of the entire sugar company. Just to give you a background, it was in 2012 that the federal government of Nigeria came up with the Nigerian Sugar Master Plan, where they said, well, we are going to produce, roughly about 1.5 million metric tons of sugar, which is the total consumption of sugar. 1.7 million metric tons. Dangote Sugar decided to come up with its own Dangote Sugar Master Plan, where we say we are going to produce 1.5 out of that 1.7 million. So we decided to go to different sites. Coincidentally, just yesterday was when I came back from one of the sites, and we are seeing a lot of improvement. With Savannah Sugar, Savannah is sustained, is producing its own sugar. Savannah has only about 3,000 TCD factory. We are upgrading it by early next year to 6,000 TCD, and we are constructing another 12,000 TCD. By definition, that means we are going to produce over 300,000 metric tons of sugar from Savannah.
By when?
That is going to come by 2022.
Oh, okay.
Okay. Then the next one is where I just visited, which is actually Tunga. Tunga is perhaps going to be the biggest sugar factory in the entire African region. And that is sitting actually on 60,000 metric tons of, 60,000 hectares of land. We are trying to make it 68,000. By the time we make it 68,000 hectares of land, 60,000 will be purely under cane. And by definition, that means 600,000 metric tons of sugar from that location alone. The next is the one that I think we are mentioning earlier before the program, which is going to be Taraba. So Taraba is also going to be in that. Now, all this is going to be roughly about 30,000 hectares of land, and about 25,000 will be under cane, and so 250,000 metric tons of sugar. So by the time you will finish all these three sites, and all these three sites are going to go concurrently. We are not finishing one site before we move to another site. So I told you, coincidentally, I just came back from Tunga yesterday, where we had finished constructing, we are about finishing constructing the pump station there. We are working on on the seed can, and we are going to do 3 types of irrigation there: drip irrigation, overhead irrigation, and flood irrigation in that other area, just in one location. Right. So, and the kind of variety of the can we have, the soil types we have, is going to be nothing but excitement.
I think there are 2 things that I think will interest investors about your local expansion.
Yes.
The first is how you're going to finance it. So is it going to be from your internally generated funds, or are you going to go to the markets? And second is help us appreciate the impact on your margins that local production has on your business.
Yes. First and foremost, you see, for instance, let's say we produce just 10% of whatever we are producing. Let's say we are going to have 1 million metric tons of production, for Dangote, and we produce only 10% from the local and 90% from the refinery. That 10% is going to add our bottom line by at least 30%.
So contribute about 30% of profit.
About 30% of the bottom line. So the local production is actually more exciting, more profitability, and that's why I'm saying that is the future. Right. By the time it's fully incubated and completed. Now, coming back to what you said, how it's going to be financed, from what we have seen so far, because of the performance of Dangote Sugar Refinery, we said we are going to take about 20% equity in whatever was going to be there. The total is going to be roughly about $2 billion. The total factory, from the numbers that we have seen that are being presented. We are looking at more final design, but the draft design that was given to us was roughly about $2 billion. Let's put it at the $2 billion, for instance. The board has already made a decision that there will be at least 20% equity. From our performance, from what you have seen, comfortably we can do the 20%. So we have
so you won't have to go to the market.
We don't have to go to the market for that initial, because everything we are doing so far is at zero debt. We are doing everything from our own resources out of that equity that we are putting forward. If the board decides to increase the equity, that's wonderful. But the board is looking forward to a situation where we can borrow. Right. We can actually borrow to be able to do this funding. And we have been speaking with a lot of borrowers that have shown interest. African Development Bank has come in, Afro-Exim Bank has come in, all these other banks have come to show interest in this backward integration. CBN has been fantastic. They have been supporting that and are just waiting for whatever is the final plan to be able to
I think another thing that may concern investors as you continue to expand locally is what we're seeing with incidences of clashes between cattle herders and their host communities. I imagine that may have impacted your business to some extent. How concerned are you about that as you look to invest more?
Well, land acquisition has been a major problem in Nigeria, and we have always been talking to the federal government through the Nigerian Sugar Development Council. We have had situations where we, in fact, have to abandon some sites as a result of our inability to be able to agree with the various government because for land. So land acquisition is a major factor. But then the other angle that you brought into it is conflict with the communities. So at Dangote, we are used to going into unfamiliar terrains. If you look at all the sugar plants, they have been in unfamiliar terrains, but we've been able to design packages for CSR and for being able to talk with the community, negotiate with the community, and come up with the plans. For instance, we just came up with a model now that instead of paying compensation to the community right now, we'll actually warehouse that amount and put it in a separate bank and pay them, and then that money will be generating interest, and they will be paid regularly so that somebody doesn't take the money right now, spend the entire amount of money and has forgotten, and then his children will come and start fighting. So if that money actually is kept in certain banks and generating interest, while he is using the interest, the entire amount is actually with that. So this is a model that Dangote Sugar Refinery is actually developing. By the time we go into that, then all these problems hopefully will be resolved.